I'm Doris Tan from Singapore, Benham and Reeves, and good afternoon to everybody. Today is a very special day as all fellow Singaporeans are going to the poll tomorrow. So I'm sure all of you will be ready for the poll tomorrow, and exciting times will be ahead of us. But before we go on to that, we are announcing today we have a very special launch of the London property in South Hall. This launch has been much long awaited, and we are really excited about it. And of course, the good news is last night we had this announcement that there will be a stamp duty holiday for up to 500,000 as your first purchase, and this applies to investors as well. So without further ado, we're here to introduce to you the project by Willis from Berkeley Homes, and our director from London, Marc will go through with you the current status in London and how the COVID has affected or impacted on the London property scene. But definitely with this stamp duty holiday and all the exciting news coming, I'm sure South Hall will be the ideal choice for all the investors, as most of the apartments are below 500,000 and they complete before April 2021. So this is the ideal investment choice, and this is so timely for the launch, as we did not foresee this to happen. So this is really exciting times for us to launch it well on time. So without further ado, let's call upon Marc to tell us more about the current market in London. Marc?
Hi, thank you very much, Doris, and good afternoon, everybody in Singapore. As Doris said, I'm Marc von Grundherr, Director of Benham and Reeves, based in London. Firstly, I'm sure I'm not alone in saying that personally, I've worked in London property for the last 25 years, and 2020 is unique. You know, times like we're going through at the moment are tragic, of course, and our hearts go out to those suffering from or helping them through the virus. But it's good to see today that things in London and globally are slowly reopening and returning to normality, with restaurants and cafes opening in London last weekend. And so what I think I can do for you right now is to cut through a lot of the hyperbole and explain exactly what's actually happening in London property at a ground level. As agents, we're working from our offices again, seeing things from the perspective of developers, tenants, landlords, and investors around the world. So just to give you a little bit of context, Benham and Reeves have been established in London property for over 60 years. We've got 16 branches today in London, and we have 2 more proposed to open in due course. And internationally, we have 8 branches, including one in Singapore, where, as Doris said, she's our regional director and runs it for us. And we've been in Singapore since 1999, helping clients with a one-stop service. And as an investor's agent, we think we are unique, not only because our Singapore office is on hand, not just to sell properties, but to support clients through the life cycle of property ownership and giving advice. And today in London, we manage over 3,000 properties. So very briefly, what do Benham and Reeves do? Well, in a word, everything. Well, that is everything property related, of course. That starts with investment advice, what to buy, where to buy. Then we handle the handover and snagging from you, so you don't have to come to London to check the apartment that is being completed. We do that for you. We then arrange for furnishings. If it needs a new furniture pack, all of the dressing items, we do all of that for you. And if it needs any refurbishment, like decorating or a new kitchen or bathroom or touch-up, we arrange and we deal with all of that for you. We deal with leasings or lettings. We deal with property management, and that's dealing with all of the tenant's issues if he has any while he's living in your property, to finally helping with tax returns. So we do those for you. Whether you have tax to pay or not, you have to do a return in London, and we do that for you. And everything that we do it in-house. Nothing is subcontracted. So we never get let down, And in turn, we never have to let clients down. So turning to what's been happening in London, as COVID hit, the London property market froze. Demand for leasing properties fell by 55% in March, and sales inquiries dropped by 70%. But if you look at the inverse of those numbers, that means that 45% of rental inquiries held up, as did 30% of buyers. But over the last month, as restrictions on agents were relaxed and the market reopened, demand for rentals and sales properties has bounced back above pre-COVID levels. In fact, today, we're receiving 7.5% more inquiries than we did in February, and June was surprisingly good for us. We let more homes in June this year than we did in June 2019. 65% were let within 5% of the asking rent, and 50% were let for longer than a year. And interestingly, just under 10% were rented for terms of over 3 years. So on the day after the government's decision to reopen the housing market, the UK's biggest portal, Rightmove, reported its busiest day on record with more than 6 million visits to its listings. That's an 18% increase compared to the same day a year before. And in fact, rental demand surged to its highest numbers of inquiries in one day since September 2019. Zoopla also reported for May, those are the last figures they have, dramatic increases in both leasing and sales inquiries, with a number of sales now at pre-COVID levels. And importantly, demand for homes 46% above levels in early March. The latest figures from HMRC showed house sales jumped 16% in May, which is another sign that the London property market is fully back to life. And if sales continue at this rate, supported by the low mortgage rate, then prices will rise much faster than predicted. And yesterday's announcement is obviously fantastic news and should make prices rise even faster, with our government scrapping stamp duty up to £500,000, meaning that everyone who buys a property by 31st of March 2021 will save up to £15,000. Yes, investors will still be liable for the 3% stamp duty for additional properties or buy-to-let properties, but it's still a fantastic saving, and I'm certain that it will encourage people to move. This additional support to the property market will help the wider economy, and so for those considering an investment, this is the perfect, if not frankly a unique time. Borrowing was already cheap, but it's even cheaper now because of COVID-19. Bank of England base rates have never been lower, 0.1%. And unlike the 2008 financial crisis, banks are fully capitalized and they want to lend. And with global markets in turmoil and money in the bank actually losing value when inflation's taken into account, property yields of 4 to 5% look increasingly enticing. Sterling, which had never fully recovered from the Brexit turmoil, has taken another hit. This means that overseas investors can benefit from a sterling discount of up to 30% today, effectively enabling you to buy at the 2014 exchange rate. And from April 2021, overseas buyers will have to pay an additional 2% stamp duty. So this was already creating pent-up demand, with many planning to beat the deadline. But they're now starting to pounce on the market, and with yesterday's stamp duty holiday announcement, people will be even more focused. Meanwhile, developers are now offering good discounts. Many have completed units which they need to sell in a buyer's market, so there are good deals to be had. But let's not lose sight of what really matters. London has proved time after time it's an extremely resilient city, be it in the face of recession, terrorism, or illness. Property has always been the safe haven, and London continues to stand out as the world's capital city. First, for a number of reasons, but the first reason is business. There's been significant post-Brexit investment. Second is finance. London has the highest concentration of financial and professional service firms in the world. The third one is tech. London has an incredibly strong tech sector. And last year, tech investment reached £10 billion in London. Amazingly, more people now work in fintech in London than Silicon Valley or New York. The fourth is a key one is education. London is the leading academic hub and consistently ranks as the world's top student city, with 450,000 overseas students studying in the UK. The fifth is the rental market. 1/3 of London households live in private rented accommodation. That's the biggest shift in property that I've seen over 25 years, and it's only going to increase further. PwC recently forecast that by 2025, in 5 years' time, 60% of Londoners will be renting. The sixth and last one is the economy. The UK is the world's 6th largest economy, and London's economic growth is double the rest of the UK. And things are only going to get a whole lot better when the completion of Crossrail actually happens. And at Benham and Reeves, we are optimistic because this is a market with very sound long-term fundamentals. COVID is a crisis with financial implications, but it's not driven by finance, as banks are fully capitalized and they're keen to lend flexibly. Most importantly of all, and this really is crucial to creating some context at a time like this, never in London's many centuries of history has there been a crisis from which markets and house prices have not bounced back stronger. And that includes the Spanish flu of 1918, the depression of the 1930s, stock market crash of 1987, 9/11, the credit crunch, or even Brexit. The market is now fully returning, and I firmly believe this is a time of opportunity and indeed a great time to invest. Low interest rates, discounts, strong rental demand, cheap pound for overseas buyers. And finally, the stamp duty holiday. As Warren Buffett puts it so perfectly, widespread fear is your friend as an investor because it serves up bargain purchasers. Whether we're talking about socks or stocks, I like buying quality merchandise when it's marked down. And there's never been a time in history that London property didn't bounce back from being marked down. So just quickly turning to our forecast for property in the UK. So for sales, UK house prices increased by 2.4% over the 12 months, which is up from 1.4% at the start of 2020. Zoopla saw house prices, asking prices for sold properties for May 7% higher than last year, with a 34% increase in agreed sales. So the revised forecast for London for 2020 for London is flat, with a forecast of 2 to 3% growth in Q3. Over the next 5 years, average predictions out there are 13 to 18% growth in London sales prices. And on the lettings front, forecasts are for a 15% growth in London rents over the next 5 years, with the prediction that 60% of Londoners will be renting by 2025. And I'm not just optimistic in my professional capacity, but as a private investor where I continue to look for value and believe this is a wise time, not just to hold property, but also to pick up some real value. It's important to target your investment. London may be a single world, but within it there are 32 different boroughs, different cultures and different property profiles. And property hotspots have been created, especially with Crossrail and now the Elizabeth line, which will dramatically reduce travel times and increase London's rail capacity by 10%. So a combination of low prices, high yields and greater capital appreciation mean that we now look at investments outside of Zone 1 with a big focus on regeneration areas. Regeneration is about creating new places where people will want to live and work. And Berkeley homes are one of the UK's leading property developers, famous for placemaking and building superb homes in regeneration hotspots. This all translates into capital appreciation for investors that buy into the vision, particularly those that buy early in phase one. And so I'm going to look at a couple of examples of regeneration projects, just two that we're involved with that we've seen massive changes. So one such example is Beaufort Park in northwest London, where they're building 3,000 homes over a 15-year period. And we've been on site at this development since 2010 and have seen the site grow in terms of popularity, rentals and capital gain. And investors in phase one paid on average £335 per square foot. And today they achieve around £700 per square foot. That's a phenomenal 110% gain, complemented by yields of over 8%. And a second example is in southeast London, so total different side of London, Royal Arsenal on the river. It's a £1.2 billion regeneration project over a 30-year period where they're building 2,500 homes and a new Crossrail station on site. Again, investors in phase one paid on average £275 per square foot. And today they achieve over £700 per square foot. That's a 150% gain. Plus, investors have been getting yields of almost 9%. And even during what's been happening over the last 5 years, both have seen average capital gains of over 22%. The story in both of these cases is choosing areas where tenants want to live and can afford to live, which in turn creates strong returns, both in terms of rental yield and capital growth, which I've just demonstrated. So this brings me to our exclusive launch today. A whole new London neighbourhood is being created in the West London borough of Ealing. It's going to be one of London's most ambitious regeneration projects, bringing a vibrant new village full of gardens, parks and piazzas. And it's all just 17 minutes from Oxford Street and 30 minutes from Canary Wharf, because like Royal Arsenal, there'll be a Crossrail station right across the road, virtually on site. This is an excellent opportunity for anybody, as it's phase one in a regeneration area with a great developer for a relatively low entry price. I'm so confident in South Waterside that it's going to become the next West London hotspot. I've already reserved a home here myself. So with 4.5% yields coupled with forecasted capital growth, this has all the ingredients of a really great investment. So now I'm going to pass over to Rob from Berkeley to talk about this wonderful scheme in more detail. Thank you very much. Rob?
Great. Thank you very much, Mark. Good afternoon, ladies and gentlemen. Thanks for joining me here today. My name's Rob. I'm here from the Berkeley Group Singapore office, and I'm here just to tell you a bit about our newest regeneration project, Southall Waterside. This is going to be one of the biggest and most important regenerations in London, and is certainly going to redefine this area of West London. But where exactly is it located? Well, as Mark said, it's in the London borough of Ealing, essentially located between Ealing itself and Heathrow Airport. It has fantastic transport infrastructure around there, with already great train lines into central London, as well as the M4 on our doorstep. So in terms of the site itself, ultimately it is an old gas holder that supplied West London with gas for many years. More recently, it's been an overflow car park for Heathrow, and we acquired the land about 5 years ago and have been making this huge regeneration plan come to life. As I said, it is very well located for all of London. Already you've got fantastic transport infrastructure around. You've got the M25, which essentially surrounds London, under 6 miles away from the development. And you also have the M4, which is a motorway into central London and also the west of the UK, just 2 miles away. On top of that, we've got the new Crossrail coming next year, which is going to completely transform access across London. Not only can you be in Heathrow in just 8 minutes, but you can get into Zone 1 Central London, Paddington in just 14 minutes. 22 minutes to Farringdon, Liverpool Street and Bank in 24 minutes, and Canary Wharf, the CBD and financial centre of the world, in just 31 minutes. So this accessibility is second to none for a development in West London. Ultimately, what this means is that you have access to global companies in and around London in under 30 minutes. So Heathrow, where you've got the headquarters of British Airways, KLM, Virgin Atlantic, and Etihad, is just 8 minutes away. Paddington, where you've got Microsoft, Vodafone, and Visa, is just 14 minutes away. Tottenham Court Road, you've got Google, UCL, and Facebook, just 19 minutes away. Farringdon, where Amazon, Royal Mail, LinkedIn, and Lego are based, is just 22 minutes away. And like I said, Canary Wharf, just 31 minutes away, where HSBC, Barclays, Clifford Chance, and Credit Suisse are located. So all of these areas can be accessed in just 31 minutes, and even Reading, 37 minutes away out to the west. And that is considering that in London, the average commute is 50 minutes, which really shows why Southall is going to appeal to Londoners and people in the local area as well. So a bit of information about the investment and what we're bringing to Southall Waterside. Ultimately, we are investing over £1 billion in the development itself. And once complete, this development will be one of the most biodiverse developments in the UK. Altogether, 21,000 full-time jobs are going to be created in and around the development. We're going to have a new leisure, retail, entertainment facilities. We're building a new hotel, a primary school. There's going to be 500,000 square foot of commercial and office space. It's not just a residential regeneration. This is a mixed-use commercial hub in the centre of West London. Ultimately, there'll be 3,750 homes with 359 car parking spaces and over 1 kilometre of canal-side living as well. So the site itself comprises of 88 acres. 13 acres of that is going to be dedicated to parkland and open space. So you're going to have, the central London on your doorstep, 14 minutes away, but you're going to have a huge amount of open space on your doorstep. And as Marc alluded to earlier, regeneration plus Berkeley leads to increased growth. And it's not just me saying this, we have seen this time and time again, North, South, East, and West London. Again, if you look at these sort of slides here, you can see Royal Arsenal between 2010 and 2018, we increased our average price there from £250,000 to in excess of £600,000. Same at Woodbury Down in North London. Here we saw a 96.4% increase in 6 years from 2012 to 2018. Importantly, when you compare that to the local market, which increased by 42%, that's more than double. And this is where regeneration comes into its own. It's adding value beyond what a local property market is. And finally, at Kidbrooke Village in Southeast London, here we've seen price increases from 2010 to 2018 in excess of 100% in just 8 years. Again, completely transforming locations, which ultimately when we first start these developments aren't the most sought after, but when you have fantastic transport infrastructure and fantastic development, it really helps price growth. On top of that, it's important to compare with the local area. As I said, Southall is located in the borough of Ealing and right next door to Ealing itself. However, the price differential between Ealing and Southall is still very large. The average price in Southall, you're looking at just under £300,000, and in Ealing, it's just below £500,000. And what this means is as we look to grow, if the surrounding areas are more expensive already, we can certainly see the growth moving in Southall. So what are the 10 sort of main reasons why people have invested in Southall? Of course, it's one of London's most significant regeneration developments. So Southall Waterside will be a place like no other, a place to live, work and socialise, a place full of gardens, parks, trees and water. You'll have shopping, restaurants, art, entertainment, cafes and culture on your doorstep as part of the development, and all of this from just 14 minutes away from Zone 1, central London. The investment opportunity. Now, as one of London's most ambitious regeneration projects, there is a good opportunity for strong capital growth, similar to those slides I just showed you at our other Berkeley regeneration projects. The Crossrail. Not only is Crossrail adding 1.9 million investment into the local train station that is right next door to our site, but it's going to completely transform accessibility from the development. as I've already explained, having this, having London on your doorstep really does open up this area of West London to more and more investment moving forward. As I mentioned earlier, it's not just about the homes that we're building here. It's about the retail, leisure and entertainment facilities that we're bringing on board. We're building a cinema, a hotel, hundreds of restaurants, retails, pubs, recreational activities and office space on this development. So it's a place, it's essentially a self-sustaining development that caters for all things that you need. There'll be supermarkets and everything like that on the development. So you don't need to leave the development to do your day-to-day work. The parkland, as I said, 14 minutes from central London, but we are going to create one of the UK's finest examples of urban regeneration that puts biodiversity and nature at its heart. And ultimately, we have 100 acres of parkland in and around the development, which you can utilise moving forward. The residence facilities. At Berkeley, we are a luxury developer. Whether or not that's in Zone 1, Zone 2, Zone 3, Zone 4, Zone 5, we always want to ensure that we have the best facilities for our residents. And the same goes here at Southall Waterside. There'll be a lounge, there'll be a luxury spa, a 24-hour gym, a 24-hour hotel-style concierge there to sort of help you or your tenants moving forward. And this sort of level of service and facilities aren't here in Southall at the moment, and certainly will put the development above and beyond the competition and local area. We're also going to offer a huge amount of waterside living. Ultimately, we have 1.2 kilometres of canal frontage running directly through the development where many of our apartments will be viewing over. And once complete, a new canal-side community facility will be provided that will ultimately host events and community gatherings for the residents of the development. Of course, the Berkeley quality is what we're renowned for. We've been building in London for over 40 years, and 99% of our customers would recommend us. Ultimately, the quality of our specification here at Southall will be second to none, and it will be at a fantastic level that you would come to expect of Berkeley itself. On top of that, you also have the trust of the Berkeley brand. We're a FTSE 100 company. We have zero gearing, which for a property a developer with as many sites as we do is a fantastic position to be in. But we've also got over £1.1 billion in the bank. What this means is you can be assured that we will complete these developments. We are committed to these developments, and we will certainly make the Southall Waterside dream come alive. And finally, at Berkeley, we are a carbon positive developer. And ultimately, this sustainability is going to be implemented within Southall Waterside. We've got water saving fixtures, rainwater harvesting. We've got communal heating and hot water. We've got green roofs. We've got recycling throughout the development. And it's a 999-year development. And we're ultimately putting sustainability at the front of that to move forward to future generations. So here on this map here, you've got the site plan of the full development. As you can see, the Elizabeth line is up top left of your screen right now. Phase 1 is essentially this green outlined area over here with 4 blocks that we've got available over here. All of the retail, leisure facilities and commercial, as well as the cinema, will be located in this orange area. So right next door to Phase 1. And also the benefit of Phase 1 is that it has the closest walk from the development to the station. As we move forward into later phases, we'll move down towards the Grand Union Canal and ultimately coming out at the west of the development in about 20 years' time. As you can see on the development as well, this is where we will be building our primary school. So you can see ultimately it's going to appeal to families, it's going to appeal to people that are working in the city, as well as education as well. So ultimately phase 1 consists of 4 blocks. We've got Sibley House, Watson House, Arbour House and Edwin House. Edwin House would be the one closest towards the station to get your bearings. In terms of the interior design, as I mentioned earlier, it's going to be to the highest quality at Southall Waterside, and they're what we call turnkey properties. So all of your major fixtures and fittings are going to be included, like your flooring, your lighting, all your windows, wardrobes, all the major fixtures and fittings in your bathroom, as well as your kitchen. Essentially, we have availability of studios, 1, 2 and 3 bedroom apartments. So no matter what you're looking for, we have something to offer. The prices, considering you're so close to central London, are extremely competitive, starting at £297,500 for a studio apartment. If you compared that to something like in Paddington, for example, you'd be looking at in excess of £750,000. These are the kitchens and the bathrooms that I was speaking about. And so this comes down to some of the layouts that we have. So here on the left-hand side is a standard suite apartment that we'd have within the development at the moment. And one of the major benefits of this is obviously the very square layout means there's very little wasted space. And at 439 square foot, 440 square foot, it's a great sized studio apartment. On top of that, you've got a 65 square foot balcony and outside space, which I think we'll all agree during having to have gone through lockdown, having some outside space is certainly essential and certainly something that people look for looking post lockdown. On the right-hand side, we've got a one-bedroom apartment, again, at 545 square foot. It's a great layout, good square space with ample space for your kitchen, living, and dining room, moving out onto your large balcony and essentially your one-bedroom, your one-bedroom ensuite next door. As for the two bedrooms, these will have great views over towards the gardens and the landscaping at Southall Waterside. Again, very square layout, good size 1 and 2 bedrooms. And then finally, the 3-bedroom apartments, which we only have, I think, 4 available, which have these great big terraces and fantastic views over the landscaping on the development. In terms of some of the facts and figures, it's on a 999-year lease. Parking is available for 2 and 3 bedrooms, an additional price of £20,000. The service charge is just £3.70 per square foot per annum, and this will include your gym, spa, building insurance, cleaning, concierge services, as well as maintenance of the landscaping and leisure facilities. In terms of reserving an apartment, you'd pay once you've chosen an apartment, you'll pay a £2,000 reservation fee that takes it off the market. You'll then pay 10% of the purchase price within 21 days. It will be 10% after a further 6 months, and then 5% payable within 12 months. 75% will be paid on completion. As Doris mentioned earlier, we do have Arbor and Edwin House complete later this year, and then going into the beginning of next year. And we still have availability of studio 1, 2, and 3-bedroom apartments there. And ultimately, these will benefit from the stamp duty holiday that we are talking about. From next week in our office, we will have the model here. So please do reach out to Doris or your representative at Benham and Reeves to arrange a meeting to come down and we can talk in more detail about the development. Thank you very much for listening to me. Now we'll open up for some questions.
Thank you, Rob. Yeah, that was good. And I think this development really ticked all the boxes and timing is perfect. So for those who have yet to buy, this is really for you, something for you. And we are open for appointments because of your safety, and during this period we have to look into all this, so we prefer to have appointments for every 1.5 hours. So do make your appointment with me. And yeah, now we are taking on some questions that we have come across. Yeah, there's Miss Rachel Tan who asked, with COVID-19 and the direction towards more work from home, is there a shift in preference for 2-bed or larger units? So Rob, you like to take that?
Yeah, I mean, I think, ultimately you want to have those opportunities to live in a larger apartment, certainly when you're working from home. I think what we've seen, certainly across the board, a bigger increase in people making sure they have outside space. I think when we've all been sort of cooped up, certainly in lockdown, to have a balcony or some outside space is great. But I think, somewhere like Southall, I think we can all agree that, none of us want to work from home necessarily all the time, and none of us want to go into the office all the time. So I think what's important about where people are going to buy is they want to have somewhere that is going to be, somewhere like Southall that has that outside space, has that kind of sense of being a little bit outside of the city, but you can be into your office in under half an hour. So I think that's generally what we see moving forward.
I think that's the case here in terms of where inquiry levels have seen. We've seen a lot. We haven't. It's all price related, and so where people do want larger apartments, it's all cost related. So if you have that extra budget, it's good to go for 2 bedrooms, but still the dearth of demand is going to be for 1 bedrooms and smaller units because it's all affordability. And while a lot of people are getting very excited about working from home now, a lot of companies will start to drive people to come back in and work from offices. But as Rob said, having outside space, I think, is a really key driver. And even if you've only got a balcony, if you're within a lovely place like Southall's going to be, there's going to be so much ground for people to go out and walk around. So it'll give that extra, nice feeling, even if you're not at home. Even if you are working from home for one day a week, it's nice to have that extra space. But we've seen a big jump in people looking for some form of outside space, as opposed to larger apartments, but definitely with some form of outside space.
Okay. Another question is, can I buy a property on mortgage if my partner has settled status and I'm an international buyer? I think the answer is yes, right? Because London is an international city and open to all foreigners and all people from all over the world.
Anybody can buy.
Anyone can buy. You can get a mortgage. I mean, ultimately, you can get a mortgage from here in Singapore, or you can get a mortgage in the UK. It doesn't matter about where you live. At the end of the day, you just got to be quite open with the banks about your information.
100%.
Yeah, another question here is, capital growth prospects in London in general, in light of the current market conditions. Marc, you'd like to answer that?
I think that's a good question. I mean, no one can look into a crystal ball. I mean, as I said, projections are between 13 and 18% over the next 5-year period. What we are seeing now, and what is a certainty, is that if you're buying as an investor and you complete the purchase, it will 100% rent. And the unit I bought at Southall, or I've reserved, it's a 1-bedroom unit because that'll be the biggest demand. I've bought in one of those 4 blocks Rob's talking about. I bought in the 3rd one. It's a close walk to the station. And, so in terms of capital growth, where we're going is no one can obviously be 100% sure. But if we're thinking 13 to 18% is the average, what we're predicting. If you buy in a project like this in phase 1, then you have the benefit of not just what the market's doing, but depending what other investors do. And if there are, as this is the first launch it's having, when this launches everywhere and it sells, then the developer, by virtue of how they work, will increase the pricing. And there will be, by time completion comes, there will have been 2 or 3 potentially price increases. So therefore you get the benefit of what the market's doing, plus developer increased values. So I think, I can't say where it's going to be. I think anywhere around 15% is good over the next 5 years, but you're going to get the benefit in a phase 1 regeneration scheme. These are added benefits of not just what the market's doing. You're getting that in spite of the market.
Yes, I fully agree with Marc, and this is really the first launch in Singapore, and this project has been very well accepted all over the world. And like I said, I've been eyeing this project for the past 2 years. It took them quite a while to get planning permission. So this is something that we like people to get started for regeneration program and also first phase. The prices will appreciate over time. But as Marc said, we're no crystal ball here. So definitely good product, tick all the boxes. So it will do well and you will benefit in time to come.
Yeah, I think I'd also add, Doris, so just, we at Berkeley, we have 70 developments currently under construction. In and around London, we've got about 45 developments. Now, this at sort of 297,500 is our cheapest London-based developer. So if you are sort of first time into London or you're looking at the sort of smaller portion of a budget, then this is a great opportunity.
That's why I keep emphasizing for those who have yet to buy, this is really the time because of the stamp duty holiday and all the other benefits. And this will only be available until April 2021. So this is real opportunity and buy into Berkeley Homes for that price. So just think about it. Another question from Mr. Andy Rice. For the mortgage, do we get it from Singapore banks or in UK? So to answer his questions, we have mortgage brokers in UK, and in Singapore we have at least 4 banks supporting this: UOB, OCBC, Maybank, and CIMB. So we can help you to arrange the mortgage here. There should be no problem.
In fact, I spoke to a broker yesterday, and all of the banks are lending at the moment. There was during COVID, there was a freeze in valuations because obviously valuers couldn't come out and do valuations. But you have time, and they are all lending. The rates are unbelievably low at the moment. It's the lowest we've ever seen it, and you can get really, really good rates. And you know, whether you do it in Singapore or UK, it really doesn't make it any easier or more difficult if you do it in Singapore or the UK. Brokers here, you know, banks here are as keen to lend as anybody. And so I think this is, you know, if you're looking for finance, this is the best time to do it. And whether, you know, UK is just as easy.
In fact, I have a client who just called me that he got a loan from Maybank at 1.5% interest rate.
Yeah.
It's fantastic.
Wow.
So I said I have to go to the bank. That was very good. Yeah. So another question is, what's the latest stamp duty? Marc, you like to elaborate that a bit?
So stamp duty it's done on an amount basis. So before it was up to 125,000 was 0, and then 125 to 250 was 2%, and 250 and above up to £1 million or just about £1 million was 5%. What they did announce last night, and it's effective from today, is all properties that complete by April 21, as Doris said, so that's perfect for the first 2 blocks here, you pay 0 stamp duty on the first £500,000. So that means there's no stamp duty that you would normally pay. If it's your own home, there's nothing. If you're an investor, or you're buying this as an investment, a buy-to-let property we call it, or you're buying it as a second home for your son to live in or something like that, then you pay an additional 3% stamp duty. But what that means is, if it's up to 500,000, instead of before paying potentially 5 plus 3, now you just pay a flat 3%. And if it's above 500,000, then your rate is as it was before. But everybody, as I said in my intro at the beginning, everybody saves, and if they complete before April 2021, up to £15,000, because the first £500,000 there's nothing to pay. So everybody benefits. This is going to be a huge boost to the market, and all agents are already reporting people are now jumping up and down to try and do stuff. So I think this is a really good incentive to the market. And then the other thing to mention is from April next year, there's going to be an additional 2% stamp duty for non-UK residents. Again, if you buy here now and you buy in the first 2 blocks, you don't pay any stamp duty. You don't pay the additional 2%. You only pay the 3%. I mean, that's a really massive incentive before you start thinking about, you know, what you're doing with your money and your finance. That's a huge saving. So it's just going to mean, and remember, other people that complete later are going to pay normal stamp duty. So that's a saving. You'll make that money back because capital gain will repay that.
Yes.
Very interesting.
Timing is important, like I said. So this is really our first launch after 3 months of absence. So,
yeah. And I think also, Doris, I think that, you know, that the rarity of a phase 1 property coming to market and completing within 6 months is very rare. Normally it would be 2 or 3 years off plan. So to get in a first phase, first release that completes within the next sort of 6 months, so you can benefit from the stamp duty holiday, is a sort of a real sort of rare opportunity.
Yeah, in fact, a client just called me and say my timing is so good, so perfect, and I didn't know we had this this webinar organized for today, but last night the great news came, and this is real timing, so don't miss it. Now another question here is from Mr. Biju Thomas. Stamp duty holiday does not apply as the completion won't be before April 2021. So Mr. Thomas, this project is completing before April 2021, the first 2 blocks. So again, we'd like you to come and have a look at it, and please call me or email me for an appointment, and it's definitely before 2021. So as explained, you will have the benefit. But you're right, after 2021, this will no longer be there, but we don't know what's next. But this is timing. Yeah, this project will be on time. Another question is, you would still need to pay stamp duty if you already have a property in the UK already. So this question is leads to Marc just answered, right?
Yeah,
if you have a second home.
Yeah,
you already have it, you still have to pay the additional 3%, but you still save on the current stamp duty.
Correct. Save on the first 5%, yeah.
Yeah.
Another question from Miss Eng or Eng Hui Lim. Are Singapore clients subjected to TDSR rules for overseas property purchase? Yes, TDSR still apply for overseas property purchase, but now the banks are very creative. They know they have better ways of.
It's only if you go through a Singapore bank, right, Doris?
It's only if you use a Singapore bank.
Yeah, the banks will be able to help you. Yeah, to go through this. Otherwise, we'll get a mortgage broker to help. Yeah. Melanie, can we get a price list? Yeah. What are the indicative price for a 2-bed? So this is very well priced. It's below 500, right? For a 2-bed.
Yeah. So for 462,500 is the starting price for a 2-bed. So 400.
Yeah, this is below 500.
Yeah.
So it's fantastic. Now, that's a very interesting question. Are royalty or discount for repeat buyer of Berkeley homes? Of course, yeah. Right?
Absolutely. Let's discuss.
Repeat buyers of Berkeley homes. So come forward. Yeah, we make sure that you get a repeat buyer discount. What happens if there is a delay by the developer beyond April 21? I think that's a fantastic question. Jayapa asked this question.
Yeah, I mean, that is a good question. I mean, I wouldn't be able to necessarily answer it just yet. I think we'd have to check on that. I mean, again, we've got, I mean, right now, my advice would be that if it got delayed beyond April 2021 and the stamp duty holiday wasn't extended, then you would be liable to the new tax change. But we'll have to get that changed. Ultimately, we can look at putting caveats in the contract, for example, such as if it doesn't exchange by or it doesn't complete by 2021. But a lot of these are completing in December, so there's more than a 3-month window, and essentially all the main structure of the properties are already there. So we certainly don't look to not complete before March 2021.
Rob, I was actually there the week before last, and I've got to say the blocks are looking pretty far along, and Berkeley will definitely want them to complete by April 2021. So I think there's very little chance that there will be something completed. If you want it, then you should buy in the very first block nearest to the station, because that's the one that's going to complete. Right? And as Rob said, that's going to be December. So I can't believe, having seen it now, that it's going to be, I mean, I'm surprised it's going to be next year. I thought everything would complete from November, December, because it's looking quite close.
Yeah.
Yeah.
Construction, is it?
Yeah, another question that is relating to this. Has construction work been delayed because of COVID?
No, I mean, not really. I mean, essentially, we kept all of our sites open throughout COVID-19, which is ultimately due to the huge undersupply of housing in London right now. The government, encouraged us to continue working. Of course, we followed all the safe distancing measures. So has construction work been delayed? Not really. I mean, of course, by following safe distancing measures, it's meant that, we haven't been as active as we'd like to be, but we have continued building throughout.
Yeah.
Sure.
Another question from Mr. Andy Rice, who asked earlier, so this is his second question. Is the lock-in period vis-a-vis to Singapore SSD? Singapore SSD, are Singaporeans subjected to capital gains tax when we sell the property? Yeah, the answer is yes, there will be capital gains tax if you sell the property. the lock-in period, there's no lock-in period, yeah, because Singapore there's a lock-in period up to 4 years.
Yeah,
So you can sell anytime, but when there is a gain, you just need to pay the capital gains tax of about starting from 20%. Yeah.
Starting from 18 to 28%. The thing that you have to remember when you buy a property is, yeah, everybody's liable for stamp duty, and it's only fair because I pay it anyway in the UK. And the stamp duty is actually paid in the UK. But the thing to do this, to try and mitigate it, because for sure you will make a gain on this. So number one, it's a nice problem to have because you're making a profit. And number two, if you've got a loan of 70%, so you're only putting 30% down, I mean, these are lovely situations to be in, but it's annoying to have to pay tax. But if you buy in multiple names, so we often try to get clients to at least buy husband and wife. But if you can buy husband, wife, and you have 2 children, and you put 4 people on the contract, then you still get the allowance, because the first just under £12,000 is tax free. So between 4 of you, that gives you a £50,000 profit. Now with no tax. Now that's pretty good news. Obviously, if you hold it for longer and the profits go up, but I would certainly look to do that, to buy multiple names. A, it's good from inheritance tax. B, it's good from a capital gains tax perspective.
Yeah, Ms. Eng asked a very good question. When is targeted completion date for the commercial section?
So the commercial section will be a few years away, so it'll probably be 4 years from now. But again, it will be in a staged period. So, first completions will start happening in about 3 years. We've already started work on the commercial. So we've already dug essentially the basement and done the foundations for it. So yeah, they'll come online over a period of time ranging over sort of the next 3 to 4 years.
And who are the people renting in this area? That's a question asked.
I think that's a really good question. Who's renting in the area? So at the moment, Southall is a typical, suburb, London suburb. But the thing that makes this project stand out is the Crossrail link, because it comes straight in. As I said, it's only, it's under 20 minutes to Oxford Street and under 30 minutes to Canary Wharf. So because of that, and because rents are high in London and price is what drives people to where they live to a certain extent, is you're going to see lots of professionals living here. I think in time you will see families when all of the wetlands and all of the landscaping is opening. But I think to start with, it'll be people, middle ranking, lower ranking people sharing, middle ranking professionals looking to live here who rent because it's so commutable and so easy to get everywhere. Equally, Heathrow Airport is only 8 minutes away, which Rob said. There are lots and lots of people work at Heathrow Airport, and that's not just pilots and cabin crew. That is thousands of people work there, on check-in and running the back office and catering. And there's thousands of people. So there will be those people, because the thing that's amazing about this scheme, and reason that they will come, because a lot of people will say, well, why wouldn't they rent somewhere else? Why would they rent here as opposed to any of the other places? Because there are lots of other developments. This has facilities no other development has in this part of London. There's a swimming pool, there's the spa, there's the gym, and all the stuff that will come that Berkeley specialize in bringing on: cinemas, shopping centers. All of that will come on site, and that will drive people to want to live here as the premier place for this area. When you look at other regeneration schemes, Beaufort Park, for example, that was exactly the same. It was a little suburban area with little houses, and people said, why are they going to want to live here? Because this is the place where there's the pool, and it is the most popular part of northwest London because of the price and connectivity. And I think Southall will be the same for West London. Convenient for Heathrow, yet it's so close to get into town.
Yeah, and I think you'll find that people, wanting that sort of better quality of life, but can't afford it in central London, right? So, if you're looking at central London where you're paying 500, 600 pounds a week for a 1-bedroom flat, that's quite unaffordable for a number of people. But when you come out to somewhere like Southall, you can still be in the city, in under 25 minutes, but you get the benefits of all the facilities on site, and obviously all of the open parklands that we're delivering at the development as well.
Oh, yeah, one last question. Mr. Rice asked, how much is the 3-bed?
The 3 beds start at 652,500.
Yeah, that's very good price for a 3-bed, right?
A 3-bedroom, it's unbelievable.
Yeah, I mean, that's the same as 1-bedroom that we have in Ealing, pretty much.
Okay, and that's another question. What is the letting and management fee from Benham Reeves? You mentioned earlier that Benham Reeves provides tax filing with HRMC. Any additional charge or is part of letting management fee?
So is that for me, Doris, or are you going to say that? So what is our standard fee? We standard charge 16% in the UK, but we offer a discounted fee for our clients in Singapore because you love a discount, and we get bashed by Doris all the time to offer her clients big, huge discounts. So we do offer a 25% discount on our UK fees. We charge 12%. I'm sure there are people out there offering a lot less, but they offer a lot less in service. They don't get the chance to deal with Doris and our team. So we have 6 people working for us in our Singapore office. And that is not just about selling stock like this Berkeley product. This is about holding your hand and being there. Very easy to buy. You pay your money. You get your flat on completion with your interest. But someone then after that has to deal with everything. And that's what we do. We're there to help the whole process through, and our office do that. So 12% I think is very good value for what we're offering. In terms of the HMRC of tax filing, we employ 3 accountants in-house who do those for you. We do charge. We have a reduced charge on it for our existing clients, and we charge, I think it's £385 a year, and that is for doing the tax. And that's less than an accountant would charge you because we have everything in place. But you're not restricted to use us. It's just easy because we're there. And even if you only have one property, let's say you buy in Southall and you want us to do that, but you have another property in Kent, we can still do the tax return for you as part of our service, even though we're not renting it. So we're here to help. But as I said, our team are there to support you through the whole process. And as I said, we offer a discounted fees for our Singapore clients.
Yeah, I think it's very important to have this service one-stop shop, not just buying and then leaving you there. That's the reason I'm here at Benham Reeves. We can help you throughout the whole process. So letting and management fees is 12%, and on top of that, tax filing, we pay an additional charge, yeah. But it's a small sum. But most people like to do it on their own as well. They can file online.
The only problem filing online, absolutely fine for filing online. Funny enough, we did have a Singaporean client. This is a good story actually, who I met about 2 years ago, and she told me that she didn't understand why HMRC's website was broken, because whenever she was a resident in Singapore onto the system, it removed the allowance, because as a British resident, I get an £11,000 allowance. And when she put in she was a Singaporean, it removed it, 0. So she assumed there was something wrong. So what she did was, she found by clicking on all of the other countries, and Malaysia's down the road, she clicked as Malaysia, the allowance came back, because the Malaysian government and the UK government have a tax. So for the last 12 years, she had been clicking that she was a Malaysian resident and not paying tax on £12,000 because she'd been Malaysian. The Inland Revenue had simply written to her in Singapore telling her that she'd done it wrong. They not only wanted the tax, they wanted 200% as a fine plus interest. And that's because she did it herself. So I'm saying absolutely do it yourself. But if you get things wrong and they find you, you can't hide because you're in Singapore or wherever you are. Your asset is in the UK and they will come after you. So just be really careful, because our poor Singaporean lady, she got this massive bill she had to pay. And it was, she thought it was the HMRC's website, but actually it was because Singaporeans don't get the allowance.
Now, one last question, I think. My understanding is that you can pick up 3-bedroom house in South Hall for approximately 350,000. So this development overpriced vis-a-vis the products around there.
Yeah, look, I mean, ultimately, you can, of course, like any new build versus the second-hand market, something that was built, 20, 30, 40, 50 years ago, you're going to find there are differences in price. You know, in Woolwich right now, you can probably find a 3-bedroom apartment, you know, a 3-bedroom house for 350,000, and we achieve prices over £1 million for our 3 bedrooms. But it's about what you get on the development. You know, we're spending over £1 billion on this development. We're adding in all the fantastic facilities that are going to be located. The specification is to a very high level. You know, they can't really directly be compared in what you're getting. On top of that, you're going to have your 2-year guarantee on everything within the development. You've got a 10-year NHBC guarantee, so you have that peace of mind to know that, you know, this is all it's going to cost you. You know, if you go and, you know, buy an old, you know, 20, 30, 40, 100-year-old house, you know, problems can start happening. A new roof needs to be done, or subsidence can happen, and this alleviates any of those fears. And ultimately, you know, it's a brand new development, and that's really the price difference.
Yeah, I think not only that, because I drove around South Hall and I saw a lot of houses around there. So this person is quite right. You can buy a house for that amount. But I think the trend is for young people. So people are moving away from family homes to start their own investment or their own home. So this kind of development will attract younger people to live and to rent. So a lot of families are buying for their kids, really. Just like in Singapore, we are looking for properties for our children. So this will be the next generation. People like to live where there are facilities, amenities, and everything else in the development. So it's going to be a great change, yeah, over lifestyle.
Yeah, I mean, it's just like in Singapore, where, you know, you look at the condo price of something that was built 50 years ago versus the condo price of something that was built today. You know, there's going to be a difference in price point there, and that's, you know, the same thing applies here at Southall as well.
Modern living is what people want now, and actually we see that if we look at inquiries we receive across our group. I mean, 95% of the inquiries we have today are for apartments with facilities. People don't, not necessarily because they want a swimming pool, which is lovely to have, or a cinema. People like a concierge. They like the fact, you know, we're talking about working from home, but a lot of people don't work from home and they're out all day. And if a package comes, who's there to put it? Where does it get left? I mean, there's lots of stuff gets lost by Amazon and DPG drivers, and having someone there to pick up your packages and deal with stuff is a really big advantage. And as I said, the tenants we get inquiries for now, that is where the demand is. People like, you know, developments that have porters, concierge, people to, you know, help out if things go wrong.
And gyms as well. They love, you know, gyms in London are, you know, over £100 a month for a subscription. Yeah. So to have one sort of on your development that you can just walk across to is a huge advantage as well.
Okay, final question. I think actually Rob has replied over the email or whatever. Say, whilst awaiting final payment of the balance after the deposit and exchange have taken place, can a purchased property be sold forward?
Yeah. At Southall, you can reassign your contract. All Berkeley developments, you can reassign your contract. If you're talking about a developer that isn't us, then I would suggest you check your contract. But it is pretty commonplace that you can reassign your contract in between, essentially, you know, once you paid your deposit monies and completion.
Okay, this ends our session today, but please make appointment with me for next week. The model will be at the Berkeley Homes office, and we will take appointments on a 1.5 hour interval. So we look forward to seeing you next week at Marina Bay Financial Center, and we'll be there to assist you with any other questions. And thanks for attending this webinar, and good to see all of you online, and tomorrow is polling day. So happy holiday.